Hello there. This is Seeni here from SingaporeForexBlog.com. Um, I'm gonna share with you further details about some trades that we did yesterday that I shared with you on our blog. Our blog is at SingaporeForexBlog.com. The market does not give you trends all the time. In fact, so please read the post first. You can go to SingaporeForexBlog.com, read the post first, and then come back and watch this video. It'll be a bit more intuitive. It'll be better to understand because I've given details on both sides. So as you can see, pound dollar here we're looking at, it has been on a nice gradual downtrend since the 18th of Jan. As you can see, it's been split across many days. Around the 18th of Jan is when it peaked, and then it started collapsing since then, and we have lost close to almost 1,000 over pips since that point in time. Now, what I was looking for specifically was for a range, okay? And when I was looking at the market yesterday, it was around this point where we're looking at. Let me zoom in a bit so it gets a bit more clearer. Okay, it was around this point that we were looking at the market yesterday, and this has already happened. So I could already see that pretty much it was bound by this channel. Now, what I did was I've drawn these two lines very clearly, and as you can see, it spans for around 90 pips, about 90 odd pips, just somewhere around there. That's what it spans out for. So within this zone, I wanted to see what is a specific trade that I could pick up. So I'm going to zoom in a bit more. Let's make this a bit more clearer. Okay. Now, around here was when I was looking yesterday. Okay. I'll put in the daily separators now. So ignore this portion and ignore this portion today. We're just going to be speaking about this portion right here. Now, when we were looking at this market yesterday, it was around this point here where it was on a nice uptrend. But having already drawn the previous resistance line, I could perhaps see if the price would have challenges at this point, at this price level. And true enough, it did. The hourly candle, as you can see here, one candle and two candles, they tried to push the price up, but it didn't happen. Both of them failed, and as you can see, if you zoom in a bit closer, and you see this candle, the first bearish candle that you see, the open price of this candle was lower than the previous close. So that's one possible indication as well, and the price did in fact move downwards. So we took a sell opportunity at this point in time, just about here. Okay, and we took a sell and we placed our stop loss just above this point, which is the immediate previous high. Now notice that the gap between the entry price and the stop loss is very tight. We are talking about somewhere between here 5649 to about here, okay, which is possibly another 20 pips away. Yeah, just around that zone, 20 to 30 pips away. And notice that it's a very tight stop loss we have placed. Now, why we do that is, if we were to take normal trend trades, we don't actually go for such tight stop losses. But this is a range market trade, and whatever price that breaks out, I don't want it to I don't want us to be caught with our pants down. I want to be sure that even if it's the stop loss that is going to be taken out, it's just going to be a tight stop loss, but it's got enough reasons to be placed there, just above the previous immediate previous high. So from that point till that point, which is about 20 pips gap that we had, okay, that was where the trade came in, just about this period over here. Okay, all the specific screenshots and the pricing level have been given in the blog post, so you can go back to that and take a look. But from this point to onwards, this point, our risk exposure was about 20-30 pips. So if I were to give a 1-to-2 risk reward ratio, I would like to have it around here, which is from this point 5648, I would like to have it around 40 pips, just about here. Okay, however, notice what I did over here. What I would like to do in a cyclical wave pattern, in a cyclical trend pattern here, trend channel pattern here, I would like to take 60% of the previous volume that the previous wave gave. So in my opinion, this is one wave. Okay, as you can see from here, this is one wave, right? This is a down wave that we have. This is the next up wave that we have. Okay, so you can see this is the next down wave that we have, right? So it can be subjective sometimes, but don't get too detailed into what you might be defining as a wave. Just look at immediate clear trend in one direction that the wave gave you. And in this particular wave that we look at, we have a wave for about 70 pips, just about there. Okay, if you want to max it out, about 80 pips, right? So 60% of that is what I would like to take, or I would like to see in my next wave cycle. So I would like to see 60% of 80 pips, which is like 48 pips, so about 50 pips. So from that point that I enter over here, which I did yesterday, I placed a take profit level of about 50 pips somewhere around this point. Okay, somewhere around this point. So you can see where the take profit was on it in the blog post as well. Now from this point onwards, okay, as you can see in the next 1, 2, 3, 4 hours, just somewhere around here, we did hit our take profit and we got out with profit of about 50 pips. The price then goes down. Okay, the price then goes down over this particular bar over here. It tries to push lower, it cannot make it, it goes back up and it closes at that point. The next candle opens slightly lower, it tried to push all the way, it tried to push the price all the way down. Okay, and at this point, notice exactly where we placed our support line. Now remember, this support line was not drawn now, it was drawn before this price action took place. So notice how exactly it touches that area and then it bounces back up. So at this point, just somewhere around here, we took another trade where we had placed a buy in this opposite direction. So again, we placed our stop loss slightly below the last previous immediate low. Okay, and our take profit was twice the amount of the stop loss. However, in this situation, I had my trade placed over here, which was around 5580 if I'm not wrong, and my stop loss was around 20 to 30 pips away. And what's happening here is that, as you can see, the waves are getting smaller. Okay, the waves are getting smaller, the volume is getting lesser, the waves are getting smaller, and this is what happens before the market breaks out, like what we see over here. The market breaks out again. Now it's a symbol that as it gets congested, it will start breaking out again. So when it starts getting congested and I can't even get my 1-to-2 risk reward ratio, it's a warning sign for me that I should not look at continually doing this beyond this trade setup. If I had taken a look at it before I placed the trade, I probably might not have gone into the trade itself. But I had already gone in, so I just decided to take whatever I can, which was about 50 pips again, and my stop loss was 40 pips. So as you can see, it's not even a 1 to 1.5 risk reward ratio. It's like 1 to 1.2, yeah, 1 to 1.25 risk reward ratio, which is very poor, and I didn't quite like it. So that was possibly the last trade I was going to place for the day, and I had my take profit placed somewhere around here. And in the next 1 to maximum 3 hours, that take profit was taken out as well. So all in all, we made over 100 pips within these two trades. And I noticed just by forming these support and resistance channels, flat trend channels, you can trade sideways, and you can trade in a sideways market by taking chances of what the market is going to give you, and taking specific volume based price action only. And like I said, remember that these are flat sideways trend channels, so they're not very lucrative. So what's most important is that you got to cover your stop loss very clearly. That's very important, and don't overexpose your risk. Okay, so that's all for this video, and I hope it was helpful in understanding what actually took place yesterday. And happy trading, guys. Take care. Bye bye.